Hey guys, Daedalus Investments here. Today we're going to take a look at the bidding war between Kansas City Southern, Canadian National, and Canadian Pacific. We're just going to take a look at a new development that occurred. Basically, Canadian Pacific is reigniting the bidding war between CN and Canadian Pacific for the Kansas City Southern Lines Railway. And this video is going to be a lot shorter than our previous ones just because we're not actually doing an in-depth analysis on a stock. We're just doing a little bit of situation analysis and seeing what the consequences may be. So before we get into everything, I just want to familiarize ourselves with the routes that CN and CP have again, so that it's going to be easier for us to understand what KCS actually adds to these guys. So Canadian National controls both the coasts of Canada, and you can see with the legend that they're the crimson red lines. So they control both of the coasts, plus they have a line going down Midwest United States that ends in the Louisiana Delta. And if the KCS deal did go through, it would be it would have Mexico as well. So there's a lot. The reason that Kansas City Southern is so valued by nearly every railroad is just because of the growth potential that is there in Mexico. Because Kansas City Southern is the only railroad that's there in Mexico. There's a whole bunch of growth potential, and CN and CP are both bidding for that growth potential. So just to, before we get into looking at Canadian Pacific's offer, I kind of want to look at what Canadian National had proposed before and what they were originally planning to move forward with. The deal between CN and KCS was valued roughly at $31 billion after fees and a bunch of taxes, but basically, as you can see here, under the terms of the CN merger agreement, each share of Kansas City Southern common stock is going to be exchanged for $200 in cash and a little over one share of Canadian National common stock, which would mean that the share value, or the cash value of each share of Kansas City Southern would be placed roughly at about $310 a share, which again valued at about $31 billion, and that's what they were originally moving forward with. So another interesting development before I get into the Canadian Pacific offer is the passing of the infrastructure bill, which didn't occur during the time in which I published the video on freight rails. This is interesting because before this, there was a lot of concerns about antitrust regulations because of the duopolies that each railroad has in North America, but those rumors kind of faded, and this infrastructure deal was passed. And the main important thing is that they're using $66 billion to boost passenger and freight rail, which marks the most significant infusion of cash in the country's railways since the creation of Amtrak. This is a really good development, and I'm definitely on board with this because this means that they are placing their money in, I believe, to be the correct mode of transportation, which I'm super happy with, and I think that this is a step in the right direction for sure. So here we're going to take a look at Canadian Pacific's offer for Kansas City Southern. Basically, a lot of headlines tell you that Canadian Pacific's offer now is worth more than Canadian National's, but it's actually not. After reading, you'll realize that Canadian Pacific is actually only offering a deal that's valued at about $27 billion as opposed to Canadian National's $31 billion. Canadian Pacific is basically going to offer $300 a share for each share of Kansas City Southern common stock. Now, the reason that Canadian Pacific is actually putting this deal out, and the reason that it actually has some brevity to it, is because Canadian Pacific believes that there are more regulatory concerns with merging with Canadian National as opposed to merging with Canadian Pacific. And they have a point, because Canadian National is an extremely large railroad that spans everywhere, and if Kansas City Southern is added to their routes, then it might raise some concerns in terms of being monopolized and having antitrust regulations come across it. So basically leveraging that, Canadian Pacific believes that their offer is essentially worth more than Canadian National's. One thing that's also interesting is that both of them use a voter trust kind of structure in order to stage the takeover. And why Canadian Pacific is offering less is because they're actually already approved by the STB, which is a transportation board for railroads, to use their voting trust sort of model in order to stage the takeover. Canadian National still has actually not been approved by the STB to use their voting trust model. because, again, they're really large and there are antitrust regulations that may come out of it. And so as a result of that, you can see here, Canadian Pacific has urged Kansas City Southern shareholders to reject the Canadian National deal because of the regulatory uncertainty that comes with merging with a railroad as large as Canadian National. So just to kind of review the price action of the stock over the last 5 days, I just have 3 graphs here. They're really simple. Kansas City Southern has gone up a lot just because of the bidding war reigniting, which means that their share price is technically worth more than what it is right now, just coming from a cemented, solid standpoint. Canadian Pacific has gone down over the past 5 days just because of the amount of cash that they're going to be dishing out to each of the KCS shareholders, and Canadian National has largely stayed flat and unaffected by all of this. So that kind of wraps it up for my situation analysis on the bidding war. Please let me know if you have any questions in the comments. Feel free to PM me on any of our social profiles, and check out our other things at Daedalus Investments. Stay tuned, guys. Thanks for staying so long, and I hope you see you next time. Thank you.